Good evening, ladies and gentlemen. This is Barry Norman on behalf of Investor Trading Academy and Investing.com, and welcome to our little class on cryptocurrencies. Now, today we're going to be talking, or this evening, depending on where you are, we're going to be talking about investing and trading in the multitude of cryptocurrencies that are popping up on the market every day. But before we can understand what is going on, we have to have some understanding of what cryptocurrency is. Now, tonight you're going to hear me talk about Bitcoin. You're also going to hear me talk about digital coins as well as cryptocurrencies. As far as I'm concerned, and this is just for our class, the three are interchangeable bits. When I say Bitcoin, I'm referring to digital currency or cryptocurrency because Bitcoin was the first, and we used to call everything Bitcoin. And as more and more of these coins got onto the marketplace, they had to come up with some type of term. And the word cryptocurrency describes exactly what they are, but it's an awful big word to say over and over and over again. So when I say coins, digital currency, cryptocurrency, or Bitcoin, on the whole, I'm referring to the generic for this whole bunch of digital coins. But to be honest with you, I'll tell you this from the get-go. I really don't get it when it comes to investing in cryptocurrency or when it comes to even expecting them to be a currency at some time. I do understand trading in the cryptocurrencies, and we'll get to that a little bit later because they become a great tool for trading. More and more platforms are popping up every day. Regulators around the world are accepting them as tradable assets, and Forex brokers and CFD brokers are adding them to their platforms every day. But let's start out first with a kind of definition of a cryptocurrency. Now today, cryptocurrencies have become a global phenomenon known to most people, while still somehow geeky and not understood by most people. Banks and governments and many companies, we're all aware of their importance. You know, just a year or two ago, if you say digital currency or Bitcoin to somebody, they wouldn't even know what you're talking about. Today, everybody does, because there's been lots of press, lots of noise in the marketplace, not the marketplace, just the general headlines. But if you take away all the noise around cryptocurrency and reduce it to a simple definition, you may just find that it's just limited entries in a database that no one can change without fulfilling a specific condition. This may seem ordinary, but believe it or not, this is exactly how you define a currency. Take the money in your bank account. What is it more than a series of entries in a database that can be only changed under specific conditions? You can even take physical coins and notes. What are these other than limited entries in a public physical database that can only be changed if you match the conditions that you physically own the coins or notes? Money is about a verified entry in some kind of database of accounts, balances, or transactions. So imagine you bank with HSBC. Now HSBC has this huge network, internal network, of all their accounts, all your personal information, and all the balances in all of those accounts. Now, they wouldn't share those with all the other banks in the world because they'd be giving up their customer base. They'd be giving out your private data. They'd be opening themselves up to all kinds of stuff. But with cryptocurrencies, it's all about this blockchain technology, which allows all of the information to be shared continuously, and every transaction is put into this huge database that is shared with every node or every exchange out there. And once the transaction is validated, it can never ever be changed again by anybody. So it's more about the technology than the actual simple coin. Imagine we talk about Uber, and Everybody knows what Uber is. It's just like everybody knows what Bitcoin is. But most people don't understand that most of the value of Uber is the network and the technology as opposed to how many people have Uber and use an Uber car. Now, let's have a look at the mechanism ruling databases of cryptocurrency. A cryptocurrency like Bitcoin consists of a network of peers. Every peer has a record of the complete history of all transactions and thus of the balance of every account. Now, the thing is, because an account is not tied back to any of your personal data, isn't in your name, and is a long series of numbers, there's no personal data. And an account is held in a wallet somewhere, somehow. And basically a transaction file just says Bob gives X coin to Alice and is signed by Bob's private key. But Bob isn't a name. Bob is 1274297543321, and he gave X Bitcoin to 1764729, and it's a basic public key cryptography. Nothing special about it. After signed, a transaction is broadcast to the entire network. So the entire network has every single transaction. And this is basic P2P technology. Nothing special about it. But it is quite unique. And then we have miners. And miners control the demand, or the supply, of Bitcoins. And a miner also confirms every transaction. So cryptocurrency is a medium of exchange created and is stored electronically in a blockchain using encryption techniques to control the creation of monetary units and to verify the transfer of the funds. Bitcoin is the best known of these examples. Now, the transaction is known almost immediately by the entire network, but only after a specified amount of time it gets confirmed. Confirmation is critical in cryptocurrency. You say that cryptocurrencies are all about confirmation. As long as the transaction is unconfirmed, it is pending and can be forged. This is when a transaction is confirmed, it is set in stone, but this confirmation process is virtually instantaneous. Okay. It is no longer forgeable and cannot be reversed. It is part of an immutable record of historical transactions of the so-called blockchain. So basically, when you have your wallet or you're dealing with an exchange, for that one brief time that it's in an exchange or wallet sitting in an exchange, you bought the currencies, but you haven't done anything with them, they are available to all kinds of hacking and everything else. Once you've made a transaction within that blockchain, it is permanently etched in stone. Everybody has it, everybody knows what it is, and that is it. Now, only the miners can confirm transactions. This is their job in the cryptocurrency network. They take transactions, stamp them as legit, and spread them through the network. After a transaction is confirmed by a miner, every node has it added to his database. It has become a permanent part of the blockchain. Now, several years ago, when I started doing the first webinars and writing the first few articles on Bitcoin, I had to learn to understand it a wee bit. And technically, I learned that it cost me a great deal of money to exchange or move Bitcoins. Okay. Now, this is it. See, they tell you that using Bitcoin is free, and it virtually is. Today, some of the Bitcoin processors are starting to charge a minor transaction fee. But a big promotion about blockchain technology and Bitcoins was that, unlike banks, there was very, very low fees or no fees in the transaction process. Well, that's kind of true. So you can move Bitcoins all around for virtually nothing, but the Bitcoin wallets and exchange charge you money. or charge you spreads or charge you conversion fees. So the Bitcoin can stay in there forever, but once you want to get it out or do something with it, there's fees. And it was costing me almost 10% from getting the money into the Bitcoin exchange and turning it into Bitcoin and getting it out. So I opened up 3 different accounts with 3 different types of wallets. Now Vox was the only one that could accept PayPal. So I could move money from my PayPal account into my Vox account. But that was in US dollars. Now, they charged me 2.8% because that was the fee charged to them by Bitcoin. But now I had dollars in that account. I couldn't convert them directly into Bitcoin, so I had to turn them into some kind of SLL, some type of lending coin that they did business in. Then I could convert them to Bitcoin. Each one had a slight little differential, so I kept losing money. Then when I would move them from there to and I opened up one with something that's called Bitcoin Wallet. To Bitcoin Wallet, there's virtually nothing you can do in Bitcoin Wallet except hold your Bitcoins and move them out. They charge a processing fee to get them in and a processing fee to get them out. Then I opened a third account with something called eCoin, which became WireX. Well, WireX offered you a multitude of credit cards that you could then convert your Bitcoin into these debit cards. But the debit cards, they charge you a monthly fee for. They charge you a high transaction fee. And so it was costing me more and more money every time I won. And the conversion rate I was getting from my Bitcoin into those credit cards, and I opened one in pounds, one in dollars, and one in euros, was very, very high. Now, fortunately for me, when I opened these up to test them, I put one Bitcoin in each, and it cost me about $700 a Bitcoin. Well, fortunately, I've let them sit there all this time, only out of no other reason except I use these wallets in some classes. Bitcoin soared all the way up to $4,600, $4,500, $4,000 right now. So I'm sitting with 3 Bitcoins worth $12,000 that I paid $2,100 for. So technically, it didn't cost me anything. I made good profit on it. But I wasn't investing or trading in Bitcoin. Then I was just trying to use it as a currency. And this is where we get a little bit confusing. Because personally, I see no future for these as currencies. Because the biggest problem I see for them to go mainstream is if you wanted your boss to pay you in Bitcoin, and he agreed and Bitcoin was $4,200 or $4,000 for easy numbers, a Bitcoin, and you got $12,000, you were supposed to earn $12,000 a month, so he paid you 3 Bitcoins. And when you got your Bitcoins in your Bitcoin account, you had to buy groceries, but you couldn't buy groceries in Bitcoin. Or say the store would accept Bitcoin. Say you went to a big grocery store and they started accepting Bitcoin. Well, you went up and down the aisle shopping and shopping and shopping, and you went up to the register, went to pay. Well, Bitcoin had fallen from $4,000 to $3,000. Well, your groceries now cost you a lot more money than you had expected. None of us can afford to live and use as a currency to pay bills on something that the value can change 20 to 30% in a matter of minutes. That this morning you could have bought that loaf of bread for 1/10 or 1,000 of a Bitcoin, and then this afternoon that same loaf of bread is costing you 0.2 Bitcoins. So it's very difficult for a currency, because a currency of a country, it may float on the market against a foreign currency, but just because the pound tumbled against almost all its crosses when Brexit was approved, your pound that you had in your pocket still bought you the same thing in the grocery store, still bought you the same thing in the drugstore, still paid for the same thing at dinner. You didn't have to worry that dinner tonight that you thought was going to cost you £5 and you took £5 with you, but today you only took a quarter of a Bitcoin, and he said, no, Bitcoin tumbled. It's going to cost you a whole Bitcoin you don't have in your pocket. So it's a problem when we look at it in a long-term value as currency. But What most of us forget, though, is there's more to these coins than just the currency side of it. The blockchain technology is becoming one of the most acceptable technologies from Wall Street to banks to everywhere. And the more we talk about blockchain and the more synonymous blockchain is with Bitcoin, the larger we see in a demand for Bitcoin. Because again, a year ago, 2 years ago, 3 years ago, it was only people in the financial market and people that wanted to be hipsters and cool and urban people that even were buying a Bitcoin. The more and more it gets in the press, not the more and more it becomes socially accepted, but the more it's in the press, the more people want to have a Bitcoin. I have lots of friends that have a Bitcoin wallet, and they have one Bitcoin too. They don't do anything with it. They just think it's cool. But if you have a million people like this around the world that just think it's cool, and another million people that say, you know what? I think Ethereum's going to go up in value in a long term, so I'll invest my $57. Well, that creates a demand in a very limited supply chain. Now, when we come to investing, okay, we have to define the difference between investing and trading. Okay. Investing is a matter of buying or owning something that will go up in value over a period of time. Now, yes, lots of us got lucky. Lots of us bought Bitcoin at $200, $400, $2, $20, and it soared to $5,000. So what you see, especially today with these ICOs, and do you know that there's over 800 different digital coins? Because when you can buy a digital coin for 25 cents and you're just saying, well, maybe it'll soar like Bitcoin, maybe it'll take me $10 to soar up, but you know what? It's $20 a coin. I can shove $200 in that account and just leave it there. $200 is nothing. And if it goes up to $4,000 like Bitcoin, I'll have 80,000 bucks. I don't care if it's 10 years from now. But this is what's happening. But is it an investment for those of us who would buy gold to put away in our portfolio that we hope steadily will go up 10%, 15%, 20% over a course of years so that our portfolio steadily grows? Wealthy people who have these large portfolios of millions of dollars or retirement portfolio, they're not looking for let's hit and get lucky that something soars up. They're looking for steady growth with low risk. Okay. So that is investing. Now you should be aware that Bitcoin is more like a speculative investment than a regular currency and can fluctuate wildly in value. Although the overall trend has been up in recent months, but crashes of 20% or more in a few days are historically not uncommon. Now we also have to remember this. We're looking at a very short period of time, and Bitcoin has skyrocketed, and so has the popularity, and they're just the hip in thing at the moment. Right now we're dealing with lots of public factors. Japan and Russia are looking like they're going to legalize digital currency. But on the other hand, China just outlawed ICOs. The U.S. is looking very carefully at ICOs because most of them are scammy. I'm not saying they're scams. They're scammy because they're getting people, they're doing this hype and getting people to get involved in initial coin offerings. That means buying a new coin. What's a new coin? Maybe I could sell buried coins. Okay, because it's got no value. It's got nothing behind it. It's got no regulation. It's got no rules. It's got no laws. So they're trying, with the market being so easily hyped, they're trying to come out with new currencies. So I'm going to launch buried coin tomorrow. I'm going to get my friends and my buddies to buy up $1 million worth of buried coin. So that'll give me $1 million in cash that I can use for hype. And I'm going to issue 1 million buried coins. Okay. Then after that, I'm going to mine them all. you get the hype. So, guess what? We have 1,000,000 berry coins at $1. We're going to do some hype, and I'm going to sell them out in the market at $10. Before I know it, I turn my million into 10 million, pay back my buddies their million, pocketed $9 million, $9 million, and you're all sitting out there with these berry coins that you can't do anything with because there's 800 coins on the market. Most of those coins can't be used anywhere for anything. Yes, Bitcoin has led the way. Bitcoin has opened up the markets. Okay. Now, there were some online stores, some online that said they would accept Bitcoins. And this, okay, but they won't accept Ripple. They're not accepting berry coins. Okay. Now, some of them will go through a digital exchange, but right now there's no market. There's nowhere to dump these. So most people are hoping out of hope that this ICO they got involved with, which is not much different than an IPO, but most people can't get involved in an IPO, will make them rich one day. Now, cryptocurrency traders have become accustomed to their price volatility and whipsaw. A 30% drop in Bitcoin prices in May preceded a recent peak of about 2 weeks. Now, what we've done is we've built some tools. And as you know, we have the VIX, which is the volatility index for the stock exchange. Now, we've got a Bitcoin volatility index. But it's only for Bitcoin. It's not for the other cryptocurrencies. And it measures the volatility in those. But for something to be an effective currency, it has to have value. The US dollar used to be represented by gold. And gold was scarce and required work to mine and refine. So the scarcity and work gave the gold value. This in value gave the US dollar value. But the fact is, gold not only was gold was always scarce, but gold since the ancient day was a way of exchange, a way somebody going from the East going to China could carry and trade before there were currencies or universal values or even banks, and they could pay something in gold. And gold had weight, and gold represented something globally. And it became a means of trade. We all needed something, or everybody then needed some way to pay and trade for something. Now cryptocurrencies work with a similar value. And cryptocurrency coins are generated and produced by miners. These miners are people who run programs on specialized hardware made specifically to solve proof of work puzzles. The work behind mining coins gives them value, while scarcity of coins and demand thereof cause their value to fluctuate. The idea of work giving value to currency is called proof of work system. The other method of validating coins is called proof of stake. Value is also created when transactions are added to the public register. Now, if you imagine, Bitcoins are mined. They're mined very slowly, very productively. These miners have to do so much work to generate a Bitcoin. And it's a lot of work. So there's a very controlled flow of these Bitcoins, and it's a known flow. It's a calculated flow. We understand. So what happens is the more press and the more headlines Bitcoins get, the more interested people get in buying them, not necessarily investing, just having one. If you just have one, the more demand creates, the farther price goes up. The more people want to buy them because they're cool, the less people want to sell them, the more the value goes up. So it's booming. It's a dizzying market. Since the start of the year, Bitcoin, the world's biggest cryptocurrency, has quadrupled in value. By some estimates, the cryptocurrency business should be worth $5 trillion by 2022. There are close to 800 cryptocurrencies worth in total around $100 billion. But this is one of the biggest things. the top 5 cryptocurrencies dominate this market, and they are most of the value of the market. All the other cryptocurrencies have small market caps, and they have virtually no liquidity. So we have the most popular: Ripple, Bitcoin, Ethereum, Monero, and we have Litecoin. These have the 5 largest value, the 5 most issued, and the 5 most tradable. Ethereum is growing by leaps and bounds. It is becoming the most popular because they have done a lot of changes in their technology. And they're very much like Bitcoin. Bitcoin, the popular currency's price, has been on a constant upward trend, creating new records almost every day. The increased price trend has reminded many of the Mt. Gov times, when Bitcoin prices rose beyond the $1,000 mark before experiencing a massive crash, and of course the problem with Mt. Gov, the ripoff, and the exchange problem. Now, that's the other problem, is when you hold your money and your Bitcoin, you're investing in Bitcoin, there's very few places to put them. You have to hold them in these wallets or these exchanges, which are not regulated and not controlled. So how much are you going to invest in somewhere and something that you can't hold somewhere? So most of this is an iffy situation, or something we have to think about. Now, that all changes when we talk about trading Bitcoin or trading cryptocurrencies. Because most cryptocurrencies are traded in pairs, and they're traded based using CFDs, a contract for difference. Because you never own a CFD. A contract for difference is between you and your broker, and that's the nice thing, is between you and your broker. Not you and exchange, not you and some dealer for cryptocurrency. It's between you and your broker. And most of these brokers, or you should be dealing with a regulated broker. And even those that are calling themselves cryptocurrency trading platforms are also, because they fall in the area of financial, are regulated, or you should only be dealing with regulated ones. That means you are trading under the auspices of government regulations and approval, and your trades are being monitored. Your funds are completely protected. Now, when you trade in cryptocurrencies, or the advantage of cryptocurrencies is we all want to see volatility. We need to see price movement, because in order to make money or profit, we can't have a stagnant market. And we also need something called leverage. Because to go in the markets and buy one Bitcoin, even if Bitcoin falls down to $3,900, you think it's going to go back up to $4,000. Well, one Bitcoin, that's a big investment to make $100. And by the time you have your costs and everything else, you made $80 with a big investment. But with leverage, and you can trade that currency, because when we talk about Bitcoin being at $4,500, what is Bitcoin at $4,500? It's Bitcoin quoted in US dollars, or it's Bitcoin against US dollars, because Bitcoin goes up and down, but so does the US dollar. So the price of Bitcoin is also based on the weakness of the US dollar. You can get Bitcoin in euros. So right now Bitcoin's trading at, say, $4,000. So if the euro is at 122, you have Bitcoin against the euro, and it's probably about $3,800. You can also trade Bitcoin against Ethereum. You can trade Ethereum against Ripple, which adds a whole bunch of new currency pairs. Now, meanwhile, cryptocurrency and investment experts believe that the recently witnessed price rallies is just the beginning, and this time there is no need to draw similarities between the tech bubble in 2000 and the Bitcoin bubble. They also see a steep further by supporting these theories with 3 reasons. One of the reasons for this growth has become The media. The more it's in the headlines, the more it's in the press, the more demand, the more volatility we have. More speculators. Specifically, if you speculate market movement of Bitcoin, even though Bitcoin recently has been a better investment than gold, it's still volatile and should be considered a risky investment. Now remember, the currency itself is not regulated. So when it comes to cryptocurrency, there's every reason to be cautious. It's not regulated. There's no Federal Reserve behind it. There's no central bank behind it. There's no real guarantee of its value, which is determined by software. Forget about deposit insurance like FDIC. Despite numerous red flags about Bitcoin, it's still all the rage for those championing its role as an alternative currency. But remember, when you're trading CFDs, it is your deposit account that is regulated and monitored. So if you deposit euros, you deposit pounds with a regulated broker, that's protected. When you're trading a CFD for Ethereum against Bitcoin, you never own either one. You are getting a contract from your broker for the price. And your profit is the difference between the price you entered the market and you exited the market. So if you bought long and you thought they were going to go up and you bought it low and sold it high, you get the difference. If you sold it high and bought it back low, you get the difference. Of course, it can move against you also, but you get the difference. So it's simply a contract for the difference. So you don't have to deal with exchanges. You don't have to deal with all the other things about owning Bitcoin because you never own anything. It's just a contract between you and your broker. So it's based on your broker's reputation, his regulation, and his integrity. So your funds are always safe and protected. Now, the other thing that you have is leverage. And leverage is very good because you only have, if you have $1,000 in your account and his Bitcoin is leveraged 100 to 1, say, you can actually buy $100,000 worth of Bitcoin. That means you could be tying up $4,000, 25 Bitcoins. So if Bitcoin goes up $10, you can make $2,500. You can lose just as much also. But you have to remember, this is a big way to get involved in an investment. The nice thing about it is you have to remember that there's no news in the headlines. North Korea, hurricanes in Florida, destruction in Houston, invasions of Russia, okay, central banks raising interest rates and loans doesn't really affect cryptocurrencies. Cryptocurrencies move basically on technical analysis. They also haven't been inundated by hedge funds, big trading houses. You want to trade the euro, US dollar. Well, you have JP Morgan and all the big heads who are dumping millions and millions and millions of these big bankers that are dumping in millions, and they have all of these computerized programs that slowly they'll dump in 20,000 and 200,000 and 2 million, then 20 million, and they actually influence the markets. They have all types of computerized programs and computers. These cryptocurrencies are so new that the markets aren't dominated by these pension funds and hedge funds and big investors. There's room for all of us. And there's room for technical analysis and simple technical analysis because most of these are prices that haven't repeated themselves and they're open to new strategies. Now, everyone likes to roll the dice and buy lottery tickets even now and then. It's part of our nature. But unless you are gifted with clairvoyance and uncanny ability to do statistics and probability in your head, you probably won't be able to beat the house. You simply don't know what the next roll is going to be or what the cards are going to be. So I find it a little troubling that there's already an official Bitcoin currency, and CNBC is hoping for $3,000 in Bitcoin price protection, hoping. What's that based on? It's certainly not based on the underlying earnings or dividends. Okay, I'll concede that Bitcoin shouldn't be directly compared with traditional measures of stock. we are taking apples and oranges. So we have new ways to invest and new ways to trade using technical information. Now, this new technical information, unless you know all about technical analysis and how to put it on charts, which you should, there are new tools becoming available on the market all the time. So I'm going to take you over real quickly, and we're going to take a look at some charts and also some tools. So here we go. Here's a simple chart on Ethereum against the US dollar. Now we see it's got a very, very strong signal right now because we have conversions between the price movement and 3 indicators, and indicators work extremely well with cryptocurrencies. And we have this complete divergence. We see the 3 indicators with upward movement and the price movement downward. Okay. Now, if you understand how to use divergence, you would get some good trading signals. But you have to learn this. Bitcoin, okay, we have a projection all the way up here to $5,600 over the long term. We see it, moving in a beautiful Elliott wave pattern. We see it, coming along a trend line. But again, you have to understand technical indicators. Here we have a very simple evaluation of Litecoin. And then a nice, easy evaluation on Bitcoin. And again, we're expecting Bitcoin to bounce up to $4,900 on its next surge. Each time we had a surge upward, we had a 75% retracement, surge upward, 85% retracement, and now we're going up, we're expecting a retracement that'll probably come between 75 and 85% down in the drop to the 85% mark of the overall uptrend, and then push back up for another leg. So there are all kinds of strategies we can use. Now the thing is, where do you get information? Now, that's investing.com just launched an entire cryptocurrency section. They're offering, number one, free of charge. It's just on their site. You all came here through investing.com. Number one, they offer all the top 10 cryptocurrencies with their market caps. And as you can see, we go with Bitcoin, it's 67.30 of that $100 billion. We see Ethereum with 26.9. Well, again, we see it all getting tied up in these top 10 Bitcoins. So here we can use their real-time quotes, and we can look at any type of currency. And as you can see, there's lots of them we've never heard of. It just goes on and on and on and on. And we can see what the price is against either the currency or either against Forex currency or against another cryptocurrency. We can also see the different prices on the different exchanges. All this is important. We can come down here and see the pairs on all their advanced charts and use them. We can see where they've traded last. But then we can also see what their performance has been. But we can then click on over and bring up all of the currencies and where they're paying at. We can see where their performance is. We can see how they performed most recently, the last daily, weekly, monthly. And then we can go click on technical indicators, technical analysis. We have Bitcoin US dollar here. It's a strong buy. Daily sell on an hourly is a strong buy. Daily sell, a strong buy on a weekly. But if we click under the Bitcoin hyperlink, it's going to give us all the technical analysis for Bitcoin. It's going to show us the moving averages, the technical indicators, and we can completely open it up and see each indicator. Then we can come down here and we can see the Japanese candlesticks. And if you know how to use candlesticks, they're down here, right here for you. We see that we have a morning time doji star popping up. It's been over the last 15 intervals. It's current, and you can see how to use it. We can also see in completed patterns. And then down below, we can see the different quotes on the price of Bitcoin US dollar on the different exchanges. And you can see there's a big variance. On Bitfinex is 41.47. On OKCoin is 40.30. On Kraken is 42.10. Bitstamp, one of the largest out there, is 41.49. So this is if you want to buy Bitcoin. Okay. So there's starting to be lots of tools out there for you to start trading. And the nicest thing is because you don't have all of these big funds and head that you have a chance, because it's very difficult in the other markets because all of these big companies have these big computer systems that are monitoring and scanning the markets, doing calculations, and almost automatically, robotically trading. But it's in their internal with their own black boxes. Right now we have new volatility, new pairs. We have hundreds of new pairs available that are freely traded, that are available for all of us to learn. And we see more and more cryptocurrency trading platforms and more of the regulated large brokers adding these assets to their trading range. So you have more places to go, more brokers to trade with, more tools to trade with. And so therefore it makes Bitcoin or digital currencies a very interesting place to start trading. Okay, like I said, investing and owning, I don't know what to say over there, but I would definitely be starting to trade digital currencies. So thank you very much. Have a very good night. This class has been recorded. If you want to see it again, you can go use the same link you used for coming to class. You give it about 24 hours and you'll be able to click on that link and bring this class up. Thank you very much and have a good night. Bye now.